Okay, so my name is Ronald Kashweka. Maybe you might have seen me on Facebook, WhatsApp, or on YouTube. You've watched maybe some of my videos, and I actually love doing this. Okay, so I've sent a number of information pertaining to VAT, almost everything pertaining to VAT, either direct VAT or import VAT, like VAT as a domestic tax, like VAT just VAT local tax, and also I've also sent information pertaining to import VAT. Okay, so firstly, let me just tell you a little bit about myself, and then afterwards we get to the work. So I do a lot of online lessons, online teachings, and I've been doing it for a number of years now. You've probably seen from my videos. I do Zika subjects like taxation, financial reporting, management accounting, cost accounting, such subjects. And then apart from that, I also do Excel and Pastel, and I also give out Pastel and I create spreadsheets just like the bookkeeping system or the payroll system that maybe you might have bumped into some time back. Okay, so today I want us to discuss VAT. I'm calling VAT your silent partner. So before we that, I once asked my uncle what VAT was, and then he told me, he was like, VAT is that moment when you make 100 kwacha profit, and then the government says, oh, that's a very nice job. How about we share it? Okay, that's exactly what VAT is. So VAT is basically more of your silent business partner, always collecting, never really investing. Okay, but today we are going to understand, we're going to learn how to keep that partner happy and while still making our own business shine. Okay. So, firstly, the first thing that we are going to talk about is what VAT is. Okay. What is VAT? Okay. All right. So, VAT stands for value added tax. So, this particular tax is charged every single time when you add value to a product, a service, or basically on imports. Okay, this particular tax is charged every single time when you add value to a product, a service, or an import. Okay, so every single time you add value, every single time value is added, there is VAT on it. Okay, every single time value is added, then there is VAT on it. Allow me to mention this. VAT is a tax that's actually paid by the consumer, not the supplier. VAT is a tax that's actually paid by the consumer, not really the supplier. Let me give you an example. Let's say, for instance, you go to ShopRite, you want to buy a drink. You go to ShopRite, you want to buy a drink. ShopRite will give you a quotation. They'll be like, okay, this drink is 15 kwacha. And maybe in the 15 kwacha, there is 12 kwacha as the actual cost for the product, and then the difference will be VAT. And then you pay them their cost, their profit markup, and the VAT. Okay, so what the business will do is they'll just collect the VAT on behalf of the government and then remit it to the government. You're not actually giving the VAT to the business, but instead you're paying the VAT to the government on behalf of the government and then remit it to the government. So businesses are not the final taxpayers, but instead the consumer actually bears VAT. So businesses are basically more of middlemen. Middlemen with very good handwriting, very good middlemen with very good handwriting. Middlemen with very good. The main person. The main person is the government represented by ZRA. Okay, so VAT is paid by the consumer. The business that actually sells the product is basically a middleman. Okay, collects the VAT on behalf of the government and then remits it to the government. Okay, so let's talk about the VAT rates. Okay, let's talk about the VAT rates. In terms of VAT rates, we have three main ones. I'll give you examples as well. In terms of VAT rates, we have three main ones. The first one is the standard rate. When you talk about the standard rate, we are talking about this default rate. It's more a default setting, okay? So the standard rate in Zambia is 16% for value added tax. Okay, the standard rate for value added tax in Zambia is at 16%. Let me give you an example. Let's say, for instance, you sell goods worth 1,000 kwacha, and then if the 1,000 kwacha that you've sold those goods is VAT exclusive, meaning at the standard rate, the VAT will be 160 kwacha, and then you add it, and then it will be 1,160, which will be VAT inclusive. Okay, so here is how it works. I know I haven't talked about the input VAT or the output. Okay, let me just wait on this so that I talk about it immediately. I just get to the input VAT and the output VAT. Okay, so that's the rate, 16%, the standard rate. And then the zero rated supplies, these products or services that are actually sold by businesses that are VAT registered, they are charged VAT, but they are actually taxed at 0%. Okay, they are charged VAT, but they're actually taxed at 0%. There's a portion here that says input VAT can be claimed. I'll explain this in details as soon as we get to our next slide. And then the eggs and supplies, there's no VAT charged. It's low 0%. There's literally nothing charged. For that particular product, there is no VAT charged. Okay, examples of exempt supplies, we can talk about, let's say, medical services or financial services. So no VAT is charged, but you also can't claim input VAT. You cannot get input VAT. And then for zero rated, the common examples that we can bring in, for instance, exports and also some basic commodities. Okay, so now let's get to the main thing. Many people usually have difficulties with when it comes to understanding input VAT and output VAT. So today what I'm going to do, I'm going to explain these two, okay? And then we are going to understand how to come up with either a VAT payable or a VAT refundable. Okay, we are going to understand how to come up with either a VAT payable or a VAT refundable. Okay, so let's talk about input VAT and output VAT. I'll start with output VAT. So output VAT represents the VAT that you collect from your customers. Do you remember when I gave you an example of ShopRite? Like for instance, you go and buy something from ShopRite. Imagine this, you are ShopRite, okay, you are representing ShopRite, and then you sell something, okay, and then you add VAT on it, your total cost plus your profit, and then you add your VAT. The VAT that you collect from your customer is what we call output VAT. Okay, the VAT that you collect from your customer is what we call output VAT. Input VAT is the VAT you pay on purchases for the business. Okay, so when you go and buy something from a VAT registered business and then you spend money on VAT, the input then what you're going to have is what we call input VAT. Okay, so let's talk about our VAT expense or our VAT income. How do we come up with either our VAT expense or our VAT income? By VAT expense, I'm talking about the VAT payable. VAT income, I'm talking about the VAT refundable. Okay? Okay, we just do a comparison. Okay, we just do a comparison. Look at our output VAT and our input VAT. Let me tell you what's claimable. What's claimable is actually your input VAT. It's claimable for VAT registered businesses. So when the input VAT is higher than the output VAT, then you have a VAT refundable, which is an income. You can claim it from ZRA. But if your output VAT is higher than your input VAT, then you have a VAT payable, which is an expense. It means this time around, you have to spend money. You have to pay that particular tax. Okay, so when we talk about the settlement, we're basically looking at the difference. And if the difference is more of input, then it's a refundable. If it's more of output, then it's a payable. Okay, that's basically just how it works. That's the format. Even if it's an exam question or in practice, when it comes to actually computing the VAT payable or the VAT refundable, this is the formula we use every single time. Okay, so every single time we have to do our VAT returns. So VAT returns are more reconciliation. So the numbers in our VAT returns should balance. If they don't, you are either making a mistake or you are practically inventing a new tax system. Okay, now let's talk about claiming input VAT. Okay, let's talk about claiming input VAT. So I want us to talk about who is allowed and who is not allowed when it comes to claiming the input VAT. Remember, I mentioned that you can claim input VAT but not output VAT. Output VAT is practically your expense. Input VAT is your income. So if you have more of input VAT, then you can claim it. If you have more of output VAT, then you have to pay it. Okay, so claiming input VAT, how do we qualify? So businesses, businesses for let me for input VAT, we're talking about expenses that are for business operations. Like for instance, you can claim input VAT on you can claim input VAT on purchases. Okay, you can claim input VAT on purchases, like purchases or your cost of sales, but you can't claim input VAT on personal expenses. They have to be business expenses, okay, like your business operational expenses. And then you can only claim input VAT within a particular period of time. You can only claim it you can only claim it within a period of 90 days. Okay, and then when you are claiming the input VAT, your claim has to be supported by the original tax invoices and custom forms. Okay, and then let's talk about the ones that are not allowed. For instance, staff entertainment, beer, or let me just say food. You can't claim input VAT on those. We can also talk about things like passenger vehicles used, privately, or we can talk about telephone bills. Okay, unless you're actually a hotel charging clients. Uh, let registrations. You cannot claim input VAT on those. And you might have a question on entertainment. So you can't claim VAT on entertainment. So the way it is that ZRA doesn't actually care how funny, or how entertaining a particular comedian was. Okay. Otherwise, you cannot claim input VAT on entertainment. Okay. So that's how it works. Okay. Let's go to the next trend. Okay. How about products that are partially exempt? Products that are partially exempt. When you talk about a product that's a business that's selling products that are partially exempt, we can talk about, for instance, there's a particular business. Some products are standard rated, some are zero rated, and then some are partially exempt. Some are exempt. So how are we going to account for VAT? Okay, like I said, it applies for businesses that sell both taxable and exempt items. So what that particular business must do is it must apportion VAT. Okay, and it can only claim the portion linked to taxable supplies. It can only claim the portion linked to taxable supplies. That's it. It cannot claim VAT on the exempt supplies. It can only claim VAT on the taxable supplies. Okay. All right. So now we have import VAT and deferment VAT. Okay, we have import VAT and deferment VAT. Okay, so here is how this works. Let me just explain to you a little something. In most cases, we have a scenario. Okay, imagine you import something from, let's say you import something from South Africa, you bring it into Zambia. Okay, you pay custom charged on the custom value, and then you also pay excise duty depending with the type of product. If it's a luxurious product or if it's dangerous to the environment, excise duty following the excise and custom rates as per ZRA. And then afterwards, you pay what we call import VAT. Import VAT is the VAT that you pay at the standard rate on your imported product. Here's how it works. You get your custom value, you add your custom duty, then add your excess duty, find the total, and then charge everything at 16%. The answer that you're going to get is what we call import VAT. Now let's talk about import VAT and deferment. So this one is normally paid at customs. Okay, some businesses qualify to defer VAT and pay later. They can pay later their VAT via returns. Okay, so import VAT deferment is like, credit terms from ZRA. Okay, but it's not very good actually, because it's not really like a bank, and they actually do remember their due dates. Okay, you actually pay in credit terms. Okay, you have credit terms from ZRA. All right, so that's how import VAT and deferment works. Okay, let's talk about the compliancy and the penalties. How do these work? So in terms of compliancy and penalties, number one, we have to file monthly returns. Every single month, we need to file returns for our VAT. We compare our output VAT, our input VAT, and then we're going to know our VAT payable or our VAT refund, which one is higher between the two. Number two, we need to keep proper records. We are not supposed to keep photocopies. We have to make sure everything is original and everything is kept properly. Okay, and ZRA actually charges penalties and interest for late submission. If you submit a return late or you make a payment late, ZRA will charge you extra for that. And if both are late, they'll charge you extra for both. Okay, so I'm actually calling this the VAT jungle. Okay, so it's not really complicated. So VAT is not really a punishment. It's just a system. Okay, it's just a system. We just have to make sure we learn the steps, we follow the rules, and then we actually do survive in this particular VAT jungle, and then we definitely thrive in this jungle. Okay, so let me tell you this: if you ever feel lost in this VAT jungle, you can actually come to me, and I'll be able to assist you with either filing a return or basically just computing your value added tax repayable amount or your value added tax, calculating your VAT payable or your VAT refund. Okay, I know giving ZRA money is not very good, but when it comes to actually VAT is not really an expense. VAT is not really an expense. It's just a system, and if you master it properly, you can use it to your advantage. Don't forget, you can number one pay, which is an expense. Number two, claim, which is an income. So you can literally get money from ZRA if you know how to use VAT system properly. Otherwise, this was the brief VAT presentation. Thank you very much. My name is Ronald Kashweka. Do you have any questions pertaining to everything I've said about VAT, input VAT, output VAT, everything theory about VAT? Is there anything you'd like to know about VAT?
Afternoon, Mr. Kaswek.
Afternoon.
Yes, this is Griffin. Yes, though I joined you a bit late, when are you going to have another session?
For VAT. VAT, I've actually shared all the information in my group, the accountants forum. I've sent PDF documents. It's practically books on everything that I've talked about here. And then tomorrow we're actually looking at a different tax. We are calling this our tax week. Okay, we want to make sure we get to understand our taxes. So we don't call them our tax, but we see them as our tactics, so that we get to learn them and we get to use them to our advantage. So tomorrow we'll be looking at a different tax. Tomorrow we'll be looking at a different tax. As for today, it's VAT, and I've shared all the theory documentation in my group.
Thank you.
All right. Do we have any other question? Okay, and for everybody else who missed this particular session, I'll send the link for the recording. You'll be able to watch it again. Otherwise, if we don't have any other question, thank you very much for your time. Hope to see you in a different session, a future session, maybe tomorrow's session, because we're looking at a different tax tomorrow. Okay, thank you very much. And also on Sunday we'll do the practical ones: how to do the returns, how to make the payments online for all these particular taxes. And that particular session will also be free. Thank you very much. See you in our future sessions. Thank you.
Thank you.